All right. Good morning, everybody. So we made it through the other side. The NVDA earnings did not tank the market. They're a little weak, um, but they said enough good things that other than some weak hands getting out, things are stable. We're holding the line, and the market is now focused on the Yellen replacement. Right. So it's going to be watching headlines, looking for more about the new administration's cabinet picks, their ability to be um, to make it through the nomination and the vetting process, and then their impact on markets. So you kind of go through the threat that Kennedy proposes to Food and Drug Administration, for an example, the impact of the guy on energy. His name escapes me at the moment, but a couple of those cabinet picks are likely to have a direct impact on markets. So now that we're done with NVIDIA, that's really going to be the next big thing, especially Janet Yellen's replacement. It's all sentiment driven at this point. The Zeldin, I guess, at Lee Zeldin, for the administrator of the Environmental Protection Agency. We'll see. That'll be the energy side. If you look at projections for the next FOMC on December 18th, we really have done nothing. And this shows the market's lack of clarity and lack of direction. A month ago, the probability of getting a cut was about 65%. A week ago, it was above 70. Yesterday, it was at 55, and we're still at 55. So we basically went from 64 to 55, but we've gone in a wave, right? We went up and then we've come back down past where we were and even lower. So market's just treading water, looking for clarity. NVIDIA said all the right things. Demand is there. They're, doing the best they can on the supply side. So it reaffirms that the demand is still strong. It just wasn't as blowout awesome as most analysts had forecast. And that was the thing, right? They didn't need to just toe the line and meet expectations. They had to beat expectations. And they're already recovering. There was changes in the war rhetoric because Ukraine is using another missile system from Europe. It was a step up. The Shadow Strike, I believe it was called. Russia increased its type of missiles and are now using intercontinental ballistic missiles. And if you look at the VIX, you look at the S&P, you wouldn't notice, or you wouldn't even think that there was something wrong, because things look like they did yesterday. The market's not pricing in this increase to the war threat. We're not really seeing it, other than a little bit in gold and crude, which are oftentimes used in a war threat situation, bit of a hedge. So we're seeing that a little, but we still have Bitcoin pressing into new highs above 92. There are questions this morning on whether or not we're going to hit 100 today. And Bitcoin is the clearest indication of risk appetite. If everybody was concerned, we would see the VIX up. We would see, Bitcoin down, gold up a lot more, oil up a lot more. And that's not really what we're seeing. So small caps leading the way. It's another form of risk appetite. The China group, China ADRs down the most, but really less than 0.5%. So not very much at all. Japan basically flat. Although we're going to get more data from Japan tonight that may be worth keeping an eye on. So we towed the line, we held without crashing and burning. We're going to get some numbers today on the jobless claims. This is the beast that they're struggling with since they've all claimed victory over inflation. So any numbers that goes to jobs is something you want to pay particular attention to. The leading economic index also, this has been trending more negatively over the last few months. It's not the one that the Fed is most focused on, but certainly want to keep track of this number. You would think that this smart website would remember that choice every day. And I shouldn't have to do it, but whatever. So we've got some Fed speakers from around the world and in the US. We got Mann, and then we're going to get some out of Europe, ECB, Lane, Elderson, Goolsby, Hammock, Schmidt. The 10-year today, I kept saying the 10-year yesterday. It was a 20-year. It's the 10-year today. Both of those, the 10, the 20, the 30, and the 52-week, all worth paying attention to. I mean, you should catch them all, but the ones in the front end, they really don't seem to be that impactful. So like this 4-week auction, you could probably just look at the IRX and just, use that collectively for all of those in the front end. And then, as I mentioned, Japan tonight, we're going to get CPI out of that. So the biggest threat today is going to be sentiment. If any of these Fed speakers are taken out of context, say anything that they didn't mean to say, that could be the biggest threat. Otherwise, NVIDIA held the line. The market's already recovering. And we're going to be looking to reclaim the previous high. A good line in the sand would be the 10-week, 58.50. We're well above that, 59.50. So we want to just work our way up through the levels, 6,000 and then 60.50 and then above that. It's not going to be a straight shot. I wouldn't expect what they call a God candle, this really big candle. I wouldn't expect one of those, but more of a grind back up. Something akin to something like this, a continued lower highs and just matching that grind to the upside. We're going to get shorter weeks as we get into the holiday season, Black Friday, and then we'll be dealing with Christmas and New Year's before you can even be ready for it. If you read headlines, you're reading articles, things like that, pay particular attention to anything that talks about performance chasing as we get closer to the end of the year. I've heard a lot of analysts, a lot of funds that kept expecting this market to just roll over and dump. So they were on the sidelines or they were short, and they didn't really do very well this year. If they're all going to start piling in, the opportunity for a Santa Claus really rally to squeeze the markets even higher, it's on the table. And we've already seen a lot of those parabolic markets where it's just going up higher and higher and higher, and you think there's no way we can go any higher now, and it goes even higher again. In those kind of markets, it'll keep doing it right up to the moment it doesn't. Oftentimes there won't be any signal that it's done. It's just done and it drops. So know what you own, I guess. My cat doesn't want to share desk space. All right, we got it figured out. So volume's a little heavy this morning at 156. Generally, we see 56, not 156. Or what we've seen recently, 164, 156. These are big numbers. 120. There's a lot of participation. The concern earlier in the week was when you get 164,000 and we're not going anywhere. Like when we get an iceberg, right? We drop down into liquidity trying to go lower, and we see the orders coming in and we're not going lower. Yeah, that's kind of what it looked like on Tuesday. Then we flipped it and tried to climb back up out of that hole. So here we are this morning getting an inside breakout of yesterday. And we've certainly got the liquidity on deck. We are headed towards the ADR half. There's edge in spotting that and just recognizing that's the goal. That's where we're headed. It's what we want to focus on. And this is a great example of the 1, 2, 3, 6 and the 111 opportunity. Just measure from the highest to the lowest point on the previous day. This is one of my favorite trades. It's the yesterday's 111. So we got the Globex high to the Globex low and the intraday low. All of yesterday is measured. And we're looking to get to the 111, since that'll put us really close to the ADR half, which is go ahead and expect the overshot into that. Then we have to get through the 1, 2, 3, 6. A lot of times, if we're going to fail, we don't even get to the 1, 2, 3, 6. We get the breakout, we get to the 111. We can't make it through that liquidity, and we fall back in again. If we can get through the 1, 2, 3, 6, we can focus on 1.5. And that gets us right up to the full ADR all the way up there. And it is worth noting, although we didn't hit it, we got really close to the other side. And it's what I say all the time. If we get to one side early enough in the day, we can go to the other side by the end of the day. Now, there is a day that we have that we don't see very often where we can hit the bottom twice or the top twice, depending on which side we hit first. So we hit the bottom, we can come up and hit the top, and then we can go right back down and hit the bottom by the end of the day. This is a maneuver that we've seen more than once, so it has happened before. It's not one that happens frequently, but when we get this breakout today, or as this breakout continues today, we're going to be watching to see if we can even get to that ADR. If we get this close, we should go ahead and get there. That's kind of the base case argument right now. If you want to tighten it up, there's nothing wrong with keeping yesterday's level in place. But just to make it a little bit cleaner, You can use today's levels, focusing on our Globex high, Globex low, and the half. Doesn't really help out too much, except the half is a little bit in front of the other one at 59.66. Now that we've got our inside day breakout, it needed to keep it. So with this red candle that we're getting right now, if it closes and we get a new candle that opens and goes lower than that red one, then we've failed on our inside day breakout. And it kind of implies we're going to retest the half. $59.32 cog line, which means $59.48 needs to hold. If it's going to trend, that needs to hold. Otherwise, we come back to the half. And if we come back to the half, then we're going to measure the entire run from VWAP. So from this crossover to the peak, measure all of that and project it to the downside. That'll be your downside target because that's reciprocation. If you got, 0.7% move this way, it owes you 0.7% that way. Reciprocation. %0.7%. That wasn't a bad estimate. Depends on where we break through this VWAP. If we just come straight down, it'll be here. Wherever it happens to be, let's just assume it's going to take a few minutes and VWAP will start to roll over. That lines us up with yesterday's low. That measurement that I did that gave us the upside projections, it works the same way in the other direction. There's your 111 down here, and it lines up with the full ADR down here. A 111 breakout of yesterday. I love this trade. It's just a really great trade. We'll see. One side or the other, I don't care. Right? High, low, it don't matter. As long as we're moving somewhere, we trade it. All right, we got these pivots just all over the place. We can see the weekly pivot, 59.42. We are above it, but we're still in that zone that I had mentioned. We need to get out of this. Otherwise, we can come back and forth over and over, and it won't mean anything, right? We got to get out of this zone. So we tried, we failed, we're back inside it. We can hover around this weekly pivot for the rest of the week and not get anywhere. It's not a magnet. It won't hold us here, but it won't act as support and resistance if we can't get away from it. It is interesting to note, if we zoom in a little bit, kind of show this as an example. This is an example of being around it where it's not a support or resistance. But once we left the range and we came back at it, it was resistance. Right? That's kind of how it works. And it's not just with floor pivots, it's with a lot of pivots. So now we're back through it. We can expect to chop around it, build another one of these zones where we're just crisscrossing it back and forth again. And we won't expect it to be support or resistance until we leave the zone again and then come back into it again. Today's floor pivot channel is higher than yesterday's, but it is overlapping the channel. So the higher floor pivot is bullish. The overlapping channels is more of a neutral, cancels out the bullish, but doesn't give us a bearish bias. Price opened above the floor pivot and the channel, and that's considered bullish. So we have one check for a mildly bullish bias because of that. But the channel is wider than we would like, and a wide channel implies if we break out, the breakout will fail. Classic D shape at this point on the current week, not getting any real resistance across these highs, and no real insight from an iceberg or a ceiling or anything like that. Still have the point of control overhead at 60.18 and a point of control underneath this at 57.50. Big round options level that we would all be looking at anyways. It's interesting that 5,800 doesn't have as much help as we would expect it to. So, Spot Gamma came out with their report right before I started the briefing. I haven't had a chance to read it yet, but hopefully they're going to provide a little bit of insight now that we're done with NVIDIA and give us some ideas on what the market's pricing in next when it comes to options levels. Looks like they've got 5,900 long equities if we stay above 5,900 on the SPX, not the ES, with resistance at 6,000. Neutral from 58.50 to 59, and then short if the SPX gets below 58.50. Well, 58.50 is basically the low on the week. And so Spot Gamma is calling a short if we get below that. And I don't think 5,800 is going to offer us any help at all. That lines us up with 57.50 before we start to slow down. Nice air pocket of about 100 points. I like it. But this is the ES, and their numbers are for the SPX. So 58.50 last week's low, last Thursday. Break that, and we can get this gap closed, 57.83. All right, so this is VWAP on the month. Down here, this cyan one, we're clearly above that, no problem. Looks like I didn't update it. We're hitting last week's anchored VWAP, which should have been redone for this week. It's interesting that we're hitting it and reacting from it, but I think that's just a line in the sand. So get it updated. Yeah, it's underneath this. That's where it was the other day. I wouldn't expect it to have changed. So no issue from the anchored VWAP using it Monday instead of last week. If you've gone through any research on anchored VWAP, there was a company called VWAP Boulevard, I think. And they had a lot of literature on keeping track of previous weeks and previous months. So, I just changed that VWAP because I wanted this week's, but there is some research about using previous week's VWAPs. It just seems a bit arbitrary, to have, I don't know, how many weeks are you going to have, and then you just start getting a ton of lines all over the place. And then, of course, Brian Shannon has been, like the champion of anchored VWAP. If you want to read more about that indicator or his concepts, I think he's got some YouTube stuff too that he does with stockcharts.com. David Keller has interviewed him. We're back above the 20-day, the 10-day, the 3-week. So a lot of those moving averages that were over our head as a consideration of resistance, we're back through it again. But at this point, and we can kind of see it on the week, they're offering no more help than that point of control did that we were talking about earlier. So if we think about, the blue line and the green line here, and I know it's all getting a bit messy, but we got the 10 here, the 20 here, and they're starting to pinch together a little bit more, but price is just crossing back and forth through here because they have no value, right? A sideways moving average is no form of support or resistance at all, but we can hold around that level and just chop back and forth, and they won't be supportive. They won't be resistive until we get away from this zone. And then if we come back to the zone again, and it's a wide zone, because unlike one of those points of control or a pivot point, this is a much wider structure. So we're looking at 59.50 on one side and 58.50 on the other side, that we could just chop back and forth in that 100-point range and not really get anywhere. So we're through it. We kind of need to keep it, but it's what we said back here. It's what we said yesterday, and we cut down through it. We took it back again. Once we leave this zone, say get above the high on the week and really start to expand towards this call wall, if we get far enough away and then we come back, we would expect it to be some form of resistance or support at that point, and it'd be support for us potentially. Volatility trigger 0 gamma still underneath this call wall above, and put wall 58.21. It seemed like it was at 58.32 cog line yesterday, but I'm checking the notes. The put wall has not moved. It was at 5,800 SPX. It's still at 5,800 SPX. So no, it hasn't moved. Maybe on the ES it did, but on the SPX it hasn't moved. 10-day, 30-minute volume profile. Unless we hold in this zone for the rest of the week and say maybe we come down to that 5,900 area, then it's likely that the point of control when it moves is going to end up at 5920-ish. Same thing with TPO. The only thing that I could see that might stop that from happening is if we run back up and we get stuck around that 60-20 area. But even then, we're going to lose a whole week's worth of price action, which is going to make that want to come to the downside. We're looking for a shift in this profile. Whether or not we get up there first, I don't think it's going to matter. So the interesting thing is, if it drops down to where we're at after we've already started the rally, then we'll just have that profiles structure underneath this as a supportive function. It kind of ties in with the Santa Claus rally. All right, yesterday we marked out the point of control, and we can see that price hit it and responded to it. We're not looking for a long-term supportive function, just marking these as areas where we expect price to respond or react. And we certainly got that. Now it's a 15-minute chart, so it's not showing exactly what price did when it got there, but We did have a tag and a reaction yesterday. So if you want to learn more about what our expectations are for these VPOC lines, go back to yesterday's time frame and look at it. We hit it around 9:15. Well, this is a 15-minute chart. So between 9 and 9:15, go back on a smaller scale and look at how price responded at that area. If you've got something like Tradeovate where you can use the pick your day function, then you can go back and watch how the order flow processed that tag. We don't have a new VPOC for today because it's already been hit. So if we were to draw the line, we came down and tagged it early this morning at the end of the kill zone. So we don't have one. Still got the overhead at 59.92 cog line, and we got one underneath this round number 5,800. That's like the only structural spot we have for 5,800. Otherwise, it's 57.50 as a focus for me. This 15-minute chart over a 10-day period really highlights this zone that we've been working in. It's not IX10 per se, but it's a tight zone. When markets wind up like this, they're looking for a big move, right? This isn't exactly a squeeze, but we get expansion and contraction, expansion and contraction. That's just market, right? So when we go through periods of contraction, the expectation is that it ends and then we expand again. Now, there's no directional bias in that logic, just that we can't stay here and that the sidewaysness of it all is going to end and we will expand. You can use something like the ADX or the DMI. Other people just use Bollinger's or VIX. Market logic is if volatility is low, it has nowhere to go but up. And if volatility is high, it has nowhere to go but down. That's not exactly true, but that's the way that market logic works. We've still got the higher price target, 59.82. It's the week's expected move. And if we were using OCR analysis, then we've been getting higher lows over the last 2 days after setting this new lower low. But we need the higher high. Well, maybe we got the higher high. All right, we got it. So higher highs, higher lows. We've still got to get out of the control candle, which is Friday's price. That's been the structure for the whole week. We got to get out of it. Right now, we're holding above the midpoint, kind of need to keep it. And we're just looking for this IX10 to finish up. The reason I said it earlier that it's not really an IX10 is because it's not one you would want. This is such a wide candle, 100-point wide candle, that being trapped inside of it doesn't offer the benefits of an IX10. You would want to be trapped inside of a very small candle for 2 or 3 days to have an IX10 that packs a punch. Something akin to this and that sort of outcome. So at this point, we just need to finish this digestion. It'd be good enough for me if we just tag that green and close on the red side by the end of the week, get a little more weakness before we start this rally into the end of the year. I don't think we're going to get it, but it doesn't hurt to ask. That 58.88 has been on the table all week. Mentioned it more than once. Get the 60-50 breakout, then we got the liquidity zone to get through 60.89 and 61.32 cog line at the 1236. We're back above the 10-day. As far as cycles go, it's a wave. So we're back above the 10, kind of want to keep it. We could get a process where we kind of chop about for a little bit, below, above, below, above. It's happened before. So, you know, it's absolutely possible that we don't just come down and come right back up, but that's going to be what we kind of need if we're going to get that Santa Claus rally, is that we get one of those kind of V recoveries in this. So this is the 10-day, and being back above the 10 is a good place to start. For the 10-week, well, we didn't get below it, and we've already started to curve back up again. So a lot of these functions where it curves down, we actually got below there, back up. But we don't have to go under there at all. And we've already started to curve back up. We're less than 2% above the 10, and we can get 3.5, close to 4 before we would even begin to consider that we're maybe overbought. So, you know, we've got plenty of room, another 1.5% above the 10 at least, before we'd even begin to start getting a little worried. China ADRs down more than 1.5%, but over a 5-day period, they're still up almost 4%. So, you know, that means they were up 6.5%, and now we're just getting a little bit of pullback. Emerging market ties in with the China group, so does MCHI. So that's all the same thing. If we remove all the China stuff, the only thing that's left is semiconductors and SMH, but SMH isn't down enough to match. All right. So China, China, all down. Semiconductors down. It's not that bad. Flip it around to the other side. Look at what's up. What's up? Financials, biotech, energy, gold, gold miners, the Mag 7 group, cloud computing, Bitcoin, nat gas. That's not a bad collection there. It is interesting to see IGV up, expanded software and technology. The play was chips versus software, right? So if we're seeing software up this morning, we're going to have to expect to see more weakness in chips. Oil and gas, it's just an algo print at this point. We're not getting any real flows up there. So kind of want to see that confirm. Cloud computing and IGV both kind of on the software side of things, getting some print needs to confirm a bit more, but I would continue to watch for semiconductor weakness if we're going to see this software side stay green. Otherwise, it's the inverse play, right? Run, I don't know, IGV and on one side and SOX on the other. Hot stocks also up, but just an algo print. Gold miners, you know, after that really fast fall, this feels more like a dead cat bounce than any sort of rally. Got a few gaps to fill. inside day breakout has started. A lot of analysts will call this a gap that is filled as soon as the line is touched on the candle of concern, but I'm not that kind of analyst. To me, if we close here and I want a gap close, then we've got to get back to where the close was. So let's get to 39 and then we can kind of go from there. Same thing with GLD rather than just the gold miners. Got an inside week breakout, but a gap that needs filled. Got a lot of work to do. IWM is looking pretty good this morning compared to some of its peers. Got to update that. Yeah, it'll take a minute. That's not the 1 day estimated move. I don't think it's going to update until 9:30. We'll give it a little time. Still, IWM looks good compared to its peers. Silver, gold, gold miners as a group collectively, precious metals. The crude report yesterday didn't provide much volatility, and we never know if it's going to, right? It's been a few weeks of no real volatility. And so after a while, it goes in cycles. If we get 3 or 4 weeks in a row where crude inventories on Wednesday don't provide volatility, then by the 5th or the 6th week, I start looking for it. We didn't get it this week, but there's always next week. Trying to gauge the bullishness this morning. How many stocks are above 0.5% in the S&P? 20. That's not bad. 20% of the S&P is up more than 0.5%. For the NASDAQ, oops, that's the negative side. We got 24% of the NASDAQ up at least 0.5%. And again, that's not too bad. Not seeing as the number of semiconductors that we'd want to see yet, but it can turn and things can change. So we're moving in the right direction. We want to focus on that rising tide and sentiment. It's going to be a big deal today. NVIDIA has already started to try to crawl back. And just the fact that it didn't absolutely crash and burn yesterday kind of gave away the rest of it, right? And that was my take probably within an hour of earnings. I believe by the time I answered somebody's question on this, that was my take. We didn't crash and burn. It could stay soggy like it has been. We've got a weekly chart here. So, NVIDIA's just been holding the line, not really getting anywhere, but not really selling off. It's very likely we're going to have another quarter just like that. So if NVIDIA is taken off the table as a reason to hold us back or as a reason for us to, get rowdy, then we want to start looking at other things. Bitcoin is a really good example right now for risk. Check the sectors, make sure we're not getting some sort of sector rotation into the defensives. So XLP, XLV, XLU, but I mean, XLU is up 3%. It's got uranium in it, utilities. But we don't want to see a rotation where we've got tech down, consumer discretionary down, financials down, and a run in things like staples and healthcare. Considering that they're all down, that's fine because we can get a rising tide and lift all of those back up. At this point, it's still software versus semiconductors. Look for that to change and have both up, both down, or software down and semis up, chips up. Keep your eye on the clock. Watch for news. We got a lot of Feds today, chipping teeth. Be careful. I'll see y'all tomorrow.